This video reviews Nintendo's first quarter financial results for fiscal year 2026, covering the period from April to September 2025. Nintendo is best known for creating some of the world's most iconic video game franchises and consoles. In the first half, Nintendo achieved strong financial results driven by the success of Nintendo Switch 2. Net sales increased sharply by 110.1% year-on-year to 1,099.5 billion yen, mainly supported by strong hardware and software sales following the June launch of Nintendo Switch 2. Operating profit rose 19.5%. This increase was limited compared to sales growth because the higher share of hardware in total sales raised the cost of goods sold, and advertising and R&D expenses also increased. Ordinary profit rose 60.5%, reflecting foreign exchange gains and higher profits from equity method affiliates, unlike the foreign exchange losses recorded in the same period of the previous year. Net profit increased 83.1% to 198.9 billion yen, supported by factors such as a gain on the sale of investment securities. The net income progress rate against the forecast of 350 billion yen shows solid progress at 56.8%. These results indicate robust overall performance and improved profitability, driven by the impressive performance of Nintendo Switch 2. In the first half of the fiscal year, hardware sales rose significantly, driven by the launch of the Nintendo Switch 2. The higher unit price of the Nintendo Switch 2 compared with the previous model also contributed to the increase in net sales, resulting in a 109.7% year-on-year rise in sales for the dedicated video game platform business. In contrast, sales in the IP-related business declined by 12.4% year-on-year, primarily due to lower revenue associated with the Super Mario Bros. Movie. During the first half of the fiscal year, Nintendo's hardware and software sales showed a mixed but overall strong performance. Nintendo Switch 2 hardware sales reached 4.54 million units in the second quarter, reflecting a decrease from the exceptionally high demand immediately after its launch, but still demonstrating solid performance. Since its launch on June 5, 2025, Nintendo Switch 2 has sold over 10 million units cumulatively through the end of September. In addition, sales of existing Nintendo Switch hardware totaled 1.89 million units. For Nintendo Switch 2 software, titles such as Mario Kart World, released alongside the hardware, and Donkey Kong Bonanza, released in July, contributed to strong sales. Combined with software from other publishers, total Nintendo Switch 2 software sales for the first half of the fiscal year reached 20.62 million units. Meanwhile, Nintendo Switch software sales declined to 61 million units. Despite this decrease, many titles for the original Nintendo Switch continue to be played on Nintendo Switch 2, resulting in stable sales for previously released games. During the first half, Nintendo's digital download sales decreased year-on-year, totaling 155.5 billion yen. The share of digital sales in overall revenue also declined. This decrease was mainly driven by the impact of exchange rates and lower sales of download-only software. For the fiscal year 2026, Nintendo has updated its consolidated financial forecast based on first-half performance and the outlook for the remainder of the year. Net sales are now projected at 2,250 billion yen, up 18.4% from the previous forecast. Operating profit is expected to rise 15.6%, and net profit is forecast at 350 billion yen, up 16.7%. The assumed exchange rate for the USD remains unchanged at 140 yen, while the euro rate has been revised to 160 yen. Reflecting changes in the dividend policy and the updated financial forecast, the annual dividend per share is now expected to increase by 52 yen to 181 yen. This revised forecast incorporates the impact of U.S. tariff measures, using the rates in effect as of the end of September 2025, for both the consolidated financial figures and the projected sales volumes. The revised sales unit forecast shows significant changes compared with the previous forecast. For Nintendo Switch 2, hardware sales are expected to rise, increasing from 15 million units to 19 million units, while software sales are projected to grow to 48 million units. In contrast, the original Nintendo Switch hardware forecast has been lowered, while software sales are expected to increase substantially. These changes highlight a strong upward revision, for Nintendo Switch 2 hardware and software, as well as a notable increase in software sales for the original Switch, despite a decline in its hardware forecast. Nintendo has changed its policy for determining the annual dividend. The dividend per share will now be set at the higher of two amounts. One calculated based on 40% of consolidated operating profit, previously 33%, divided by the total number of outstanding shares at the end of the fiscal year, or one calculated based on a 60% consolidated payout ratio, previously 50%. This new policy will be applied starting with the year-end dividend for the current fiscal year, resulting in higher shareholder returns than before. Stock price. This chart over the past year shows the stock price in Japanese yen at 13,905 as of November 7. This chart shows the stock price in US dollars at 22.40 as of November 7. The stock price had been trading around 13,000 yen recently, but following this earnings announcement, it rose to around 14,000 yen. Current PBR is 5.75 and PER is 46.3. Dividend yield is 1.30%. Compared with historical PBR, PER, and dividend yield, the stock price appears high, reflecting both the company's strong past performance and expectations for further growth. Conclusion. First half performance was outstanding, driven by impressive sales of Nintendo Switch 2 hardware and software. Consolidated net sales, operating profit, and net profit all showed significant year-on-year growth, and the company has raised its full-year financial forecast accordingly. While digital sales and some IP-related revenues declined, overall performance remained robust. Additionally, Nintendo has updated its dividend policy, reflecting the improved profitability and providing shareholders with higher expected returns.